evening. Indian stock indices resumed their southbound journey, reversing part of the previous session's stellar rally after the government failed to build a political consensus on the thorny issue of allowing FDI in multi-brand retail. The parliament was adjourned for sixth consecutive day today as various parties, including key UPA allies, continued to demand a rollback of the cabinet decision on opening up the retail trade. Adding pressure to the fragile sentiment were reports that S&P could downgrade the outlook on France's AAA rating to negative in next few days. Moody's Investor Service said that it may cut subordinated debt ratings on some European Union banks. In addition, Fitch Ratings warned the US about its ballooning budget deficit. Fitch maintained its AAA rating on the US but lowered its outlook to negative. The BSE Sensex lost 158 points to close at 16,008 and the NSE Nifty lost 46 points to close at 4,805. The two benchmarks opened lower and stayed down for the morning trade before hitting day's high in early afternoon. However, the recovery proved to be short-lived. The indices turned lower again and touched session's low before closing off day's low. The BSE Small Cap Index and the BSE Mid Cap Index fell by approximately 0.2% and 0.5% respectively. In terms of sector, pharma, FMCG and auto managed to buck the negative trend. The realty sector was top loser, down by 2.3%. Banking and oil and gas indices were the big losers, down by 1.9% and 1.8% respectively. Consumer durables, metals, PSU and tech indices dropped 1% or more each. Shares of retail companies were down for the second consecutive session as pressure mounted on the government to roll back the decision on allowing up to 51% FDI in multi-brand retail. Pantaloons, Shoppers Stop, Trent, Provoke, Vishal Retail and Coutons all finished lower. The parliament has hardly done any business of significance in 6 sittings during the ongoing winter session. It may not function normally until the FDI in retail issue is settled. The Prime Minister had called an all-party meet on the sensitive matter. However, the ruling party could not assuage the concerns of the various political parties. The political rumblings are likely to have some effect on the markets. Meanwhile, reports suggested that India's GDP was likely to fall sharply in the second quarter ended September 30th. Some economists even fear a dip below 7%. The data will be released by the government tomorrow. India's Q1 GDP grew by 7.7%, weakest in last 6 quarters. For the day, global investors will have to contend with reports on US consumer confidence, US housing prices and European Union consumer confidence. Watch out for statistics on manufacturing PMI, services PMI, exports and auto sales scheduled to be released later in the week. China's manufacturing PMI and US monthly jobs report will be among the other important data points to keep an eye on for the week. Asian markets closed higher for second day in a row on growing speculation that European leaders are making progress in addressing the region's credit crisis. European stocks recovered from a weak opening as investors awaited the outcome of the Eurozone finance ministers' meeting in Brussels later in the day. The Eurozone finance chiefs are stated to consider draft operational rules for the region's bailout fund. Thank you. Wish you have a great evening ahead.